You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Friday, May 31st, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story of the day is from investing.com. It's the top 5 things to know in the market on Friday. The first thing to know is Trump slaps Mexico with 5% tariffs. In a surprising move that would likely derail the U.S.-Mexico-Canada agreement, U.S. President Donald Trump promised to place 5% tariffs on all Mexican goods exported to the U.S. until the country takes measures to stop immigrants from crossing the American border. Trump tweeted that the tariff would take effect on June 10th and last until such time as illegal immigrants coming through Mexico and into our country stop. The president indicated that tariffs on Mexico would gradually increase if action was not taken. A statement released by the White House specified that they could rise as high as 25% on October 1st. The second thing to know today is trade worries hit risk sentiment, sending stocks spiraling downwards. Global stocks registered a sharp sell-off while sovereign bonds surged on Friday. Fears that Trump's shock threat of tariffs on Mexico risked tipping the U.S. into recession, while disappointing China data added to the woes. Asian stocks closed mostly lower, with trade worries pummeling sentiment, even as data released Friday showed that China's factory activity in May contracted more than expected. European shares sank to 3-month lows, with particular pressure from automakers that have plants in Mexico. U.S. bond yields touched fresh lows, and parts of the curve inverted further, seen as a warning signal for recession in the world's largest economy. The third thing to know is Uber shares are higher after first earnings report as a public company. Uber saw shares move slightly higher in pre-market trade Friday after the company delivered mixed earnings in its first report as a public company. The company's $1 billion net loss was in line with its own financial guidance, and analysts applauded improvements in take rates, the revenue received by the company after subtracting driver or restaurant pay and incentives, along with accelerating revenue growth. In more downbeat reports, Gap saw shares plunge, as its Old Navy brand posted the weakest sales in 3 years, and the company cut its profit forecast. Costco also saw shares dip despite better than expected earnings, as the company admitted that prices would likely rise due to tariffs. Big Lots will be in focus Friday, as it reports earnings ahead of the opening bell. Fourth thing to know, personal spending and income are seen rising. Economic indicators kick off with the most recent numbers on personal income and spending ahead of Friday's open at 8:30 a.m. Eastern. That's out. Personal spending was forecast to have risen 0.2% last month, with personal income up 0.3%, according to economists' forecast compiled by Investing.com. The Federal Reserve's preferred inflation gauge, core personal consumption expenditures, which exclude food and energy, is expected to post a 0.2% rise for the month, but remain at an annual rate of 1.6%. At 9:45 a.m. Eastern, that's out, the Chicago Purchasing Managers Index PMI for May came out. Economists were looking for the measure of Midwest manufacturing activity to tick up to 55.1. At 10 a.m. Eastern, that's out, the University of Michigan released its revised Consumer Sentiment Index for May. The index was seen edging down slightly from the preliminary measure to 102 even. And the fifth thing to know today is Trump's tariffs on Mexico may make U.S.-China deal more unlikely. Though Trump's announcement on tariffs on Mexico has shifted the focus of financial media headlines, the ongoing trade dispute between the U.S. and China simmered on the sidelines. Analysts warned that Trump's tariffs on Mexico make a deal between Beijing and Washington even more likely. Their argument points to the fact that the recently agreed revisions to the North American Trade Agreement appear to have been derailed by Trump's arbitrary decision, lessening the value of reaching any deal. Dai Xianglong, who headed the People's Bank of China from 1995 to 2002, remains an influential figure in China, noted that the U.S. approach to trade talks has been bullying and America first. Dai further indicated that the current situation suggested China's president, Xi Jinping, and Trump are likely to find it difficult to make major progress towards ending their country's trade war when they meet at a G20 summit in Japan in June. And our second story today from Investing.com is a follow-up. U.S. inflation picks up, and the slowing economy is likely to curb a rise. U.S. consumer prices increased by the most in 15 months in April, which could support the Federal Reserve's contention that recent low inflation readings were transitory and allow the central bank to keep interest rates unchanged for a while. But gains in inflation are likely to be limited, as the report from the Commerce Department on Friday also showed a deceleration in consumer spending last month. The latest indication that economic growth was slowing after a temporary boost from exports, inventories, and defense spending in the first quarter. Low inflation, together with slowing economic growth, have led to calls, including from President Donald Trump, for the Fed to cut rates. Fed Chairman Jeremy Powell has maintained the soft readings may wind up being transient. The Fed this month kept rates unchanged and signaled little inclination to adjust monetary policy anytime soon. Our third story of the day is from MarketWatch.com. Two-year Treasury yield drops below 2% as tariff threat sparks a global bond rally. Government bonds rallied sharply Friday, seeing yields sharply lower as investors sought havens following President Donald Trump's threat to levy tariffs on Mexico in an effort to curb immigration. The yield on the two-year Treasury notes dropped more than 7 basis points to 1.992%, dropping below the 2% threshold for the first time since February of 2018. According to FactSet, the 10-year Treasury note yield tumbled 7.2 basis points to 2.151%, the lowest since September of 2017. Yields fall as debt prices rise. The move was a global phenomenon, with the yield on the 10-year German government bond, or Bund, falling deeper into negative territory. The Bund yield was down more than 4 basis points at negative 0.21%. The tariff threat underlined worries about economic growth, analysts said, sending global equity markets skidding, with U.S. stock index futures, of course, pointed to sharp losses on the open. And that, ladies and gentlemen, is news you can use for today, Friday, May 31st, 2019, your Options News Rundown. I'm Dan Passarelli, trade smart, and have a great weekend.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.